Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. It is the 7th of July, coming to you from the live trading room of the drstoxx.com website, drstoxx.com. We've been in business every market day since October of 2002. And if you want to join me and a really nice group of amazing traders of all different levels, we've got brand new beginners, we've got people in the middle, and quite a few who've been trading for years and years, all joining me, watching me, what I do. I give you my entry price, stop price, target price, reasons for the trade of everything that I am buying and selling. And it all takes place in the live trading room. If you want to join us, go to drstoxx.com, click the subscribe menu, scroll down to the live trading room. And if you want to add on our brand new live options room, you can do that at a discount. I was just telling those in the live trading room that it seems like right now the options room is just going gangbusters. We've been putting some nice profits. We hit all-time profits on an ROI basis on Friday. We are up green today when the market's red, just firing on all cylinders. And we've been hitting some stop outs in the live trading room. But it seems like it switches back and forth. So when one room is hot, the other is not, and vice versa. Anyway, that's just how it is with trading. So let's get over to, first thing I'm going to do is go to finviz.com and take a look at the overall market. So here's your heat map, and you can see that per the S&P 500, there's just a lot of red out there. In fact, I'm not sure where it is right now, but a little bit ago it was 80%, over 80% of all the stocks trading on the big board are red today, and that's, of course, not a good thing. Now, it's not unexpected because we've been just going up and up and up and up, new all-time high, new all-time high, new all-time high, day after day, week after week, since the April bottom, the tariff panic bottom. That's a good thing. I think we're in a brand new bull market cycle, but we've gotten just way too far extended away from moving averages, away from valuations, and I think the market's ready and due a little bit of a comeback. We also had some news out today from Trump that he's adding on more tariffs to more countries, and the market's not real happy with that. He did push back some tariffs from this week to a few weeks down the road. That's a good thing. But then he added new tariffs that we didn't even know about to Japan and some other countries. So it's kind of a mix today. And then in the background of all that, you've got Elon Musk, owner of Tesla and some other private companies, claiming that he's going to be building a new third party, political party. That's got Tesla way, way down today and knocked down to some support levels. And that's just throwing a little bit of a curveball into the whole macro landscape. So that's why we're red. You can see it's a pretty broad mix of redness, right? There's not really a safe haven here, with the exception of maybe some defensive plays. If you want to buy a cigarette company and Walmart and Costco, you're doing okay. Utilities are mixed, but maybe leaning green. And there are a handful of companies. Uber's up nicely today, PLTR, GEV. These are AI plays that are doing nicely today, but they weren't doing all that nicely last week, so it's a bit of a bounce back for them. We have found some really nice pockets of green strength today, despite all of this redness. And I'll share those with you in just a minute. But just to say that the overall market picture looks a little bit on the weak side. It's not a huge sell-off, but the Russell 2000 small cap index is leading the way lower, down 1.4%. And you can see the S&P, the NASDAQ, and the Dow are all trading just off lows of the session. We're at 78.2% of stocks on the big board that are down now, so starting to tick higher. Here's a tip for you, a pro trading tip. If you keep track on a down day like this of these decliners, when it hits 80%, that's typically it for the day, right? You don't usually get much worse than that. It does happen, but on average, when you hit 80%, pretty much the bottom is in for that day, and you can move on. Doesn't always happen that way, and you don't want to go out there and just buy a bunch of stuff when it hits 80%, because it's probably going to be down again tomorrow. But just as a little pro tip, you don't want to go heavy short when it's 80% down, because you're likely going to get in at the bottom of the day. Okay. Now, some good news. Some new highs are way, way, way ahead of the new lows, but that's, of course, because the market is up near all-time highs. And here's something that has been improving quite nicely. few weeks ago, 3 weeks ago maybe, more stocks than not were trading below the 200 period moving average, even though the market was still up near, just at that time, near all time highs. But most stocks were not doing that well. We're now starting to see broader participation in this rally, and that's a very good thing. We want to see some of these beaten down sectors, energy, healthcare, biotechs, them, we want to see them start to get a bid, and the small cap index as well. But I don't think this week is going to be all that great for going on the long side of indexes, the major indexes at least. Yeah, we can scroll down and I'll show you a few of these. Scroll down to those stocks that are doing well. We saw a few of the greens right on the heat list. But as far as the indexes go, I think for the next week, maybe 2 weeks, you're going to have to really think more about some inverse funds rather than the leveraged long funds. I could be totally wrong about that. We could go right back up to new highs tomorrow, but I'm just telling you what 23 years of trading experience is telling me, and that is that we're due a modest pullback. I don't think it's going to be anything to get scary. I don't think we're going to break through a whole bunch of support lows. I don't think it's the kind of thing you want to get heavy short on, but just keep in mind that you'll probably make a little more money on the inverse side of the index ETF worldview as opposed to the long view for the next few days at least. Okay, now let's go over to index charts. We're going to go to trading view. We're going to start with the S&P 500. This is the 2-hour chart. That's not what I want. I want the daily chart, which is over here. Okay, let's get rid of some of these lines. And you can see here are the former highs, right around 6150. We broke out of that, a week and a half ago or so. We've had 6 or 7, 8 sessions on the upside, each time setting a new all-time high, and the market has just petered out. It's just gotten a little too tired. So why do markets get up to this range and then all of a sudden they put on the brakes and they reverse? And this is a pretty serious looking reverse, right? Well, there's several reasons for that. One is just a technical thing. When you get too far away from your moving averages, you get into like a standard deviation away from that average that is just unsustainable. I saw somewhere, and I wish I had this chart with me, but um, that we just hit a standard deviation away from the mean at the highest level we've seen since the beginning of a bear market, which I think was at the beginning of 2022. So that's kind of a scary statistic. Last time we hit that level, the market went down for months. I don't think it's going to go down for months. There's no real reason for it to economically, but just keep that in mind. Standard deviation is too far away from the mean. What do I mean by the mean? Well, there's several on my chart here. The 21 period EMA is your short-term mean. The 50 period SMA, look at that distance, right, between the high on Friday and the 50 period SMA. That's huge gap, huge gap. And when you get a little too far away from that, like here's another example, right? Way high above the 50 period moving average, you tend to get some pullback. I think it's probably going to pull back into the 21 period moving average, but not as a straight drop. The 21 is going to be coming up. The index will be making kind of a choppy trend lower, little just common pullback, nothing to get too worried about. And when those two guys kiss, I think we'll have some good buy signals forming at that point. So moving average mean, you also have the midline, of the LRC, the linear regression channel. That's that pink line right there. When it gets too far away from that, because that's a standard deviation thing as well, you tend to get a collapse back into the mean. And then you've also got valuations. So when the S&P 500 on an average valuation basis gets a little too stretched above historical norms, without a surging growth in the underlying economy, which I don't think we have, we will have soon, but not there yet, you tend to get some pullback as well. So that's really all we're seeing. Another way of thinking about where this is going to land is the former resistance line at the all-time highs, now support line. That will also likely act as some as a cushion on any downside return. All right, so that's the S&P 500. My map is a modest 2-week consolidation. We'll call it a consolidation, a little bit of weakness, a little bit of pullback, a little bit of discounting. And then we should, by mid-July, by let's say the 15th to the 20th, in that period, we should have some really, really nice setups for a good run into the rest of the summer. We're going to have a good summer. We're going to have a good Christmas rally. It might be a little weak in September, as it usually is, but that's my map. The Nasdaq 100 is actually stronger in general than the S&P 500, and there's not quite as much um, downside to go. You can see that it is above the 50 and it's above the 21, but not quite as stretched as we saw in the S&P. And if we look at the former all-time highs, that line right there is not that far away. So Nasdaq, I don't think. I mean, if you really want to put your money into a bullish fund, the only index I would recommend right now, maybe the semiconductors, the SMH, but the QQQ. I think you're probably going to sit through some drawdown if you buy it today, but I think that it's going to do better than the S&P, than the small caps, than the Dow Jones. Let's take a quick look at the small caps. You can see that it hasn't been that strong, right? All-time highs are way up here. It's well below the all-time highs. I'm sorry, that's not even the all-time highs. That's the 52-week highs. We're well below, the 52-week highs are well below the all-time highs. Russell has been in not a very good place for quite some time now. Rates are just too high. Money is too expensive. But it has been showing some positive signs, right? We did break out of the inverted head and shoulders. It was a nice clean breakout on good volume balance. We got up above the 200. The 21 is rising. The 50 is rising. We had a bullish cross of the 21 over the 50 a while ago. So you're starting to see some, some structure of the small cap index build itself into the price chart in a positive bullish way. But there's still a lot of work to do. And now we have a 3-bar reversal. It's a bearish one into a volume shelf. That's that light pink box. The darker pink up above is a stronger box, and we're not up there yet. So it has some work to do. Let's take a look at gold, because we were long I'm actually long gold myself. I've been long gold for a while. It's an old trade that I just never really sold. And we were long the miners. We unfortunately got slashed out of it, or stopped out of it, on a deep cut low off the open. And then it was one of those classic shakeouts of the weak hands. Everybody got out, the stops were triggered, and then it went right back up. I do think that gold is looking bullish here. I would have to say that, if you don't want to buy stocks and you don't want to buy bearish funds, think about a long in gold. You can use UGL. You can use the Micro E-mini, which is what the MGC is standing here for. GLD is, of course, their standard fund, or you can do some calls on any of those things. So here's the thing, right? We got up to new all-time highs about 3 weeks ago. It has pulled in an ABC fashion down to the lower edge of the linear regression channel. In an uptrending channel, that's typically where you see a hold and a pushback higher, giving a little bit of that back on Friday and a bit more today, but it's really flat today. We're back above the 50. We're just under the 21. And I think gold is just kind of consolidating here in a little base, a little bottoming base before it gets back up. So this big dark purple shelf here is where you find a lot of supply, a lot of overhead resistance. So if it gets up into that again, it may not get through it for a while. But as I like to say, the more times you knock on the door, the more likely that door is to open. And every time you get up into that shelf, a few more shares get taken out into the hands of bulls. And the less selling, the pressure you have up there, the more likely it is to burst through. Okay, oil is still kind of looking really weird. It's just a no-go zone for me. But that said, I kind of like ERX, which is the, let's look at XLE, which is the, well, maybe not so much today, but I like what this fund is doing, right? These are your big oiling Oiling. Your big oil distillers and pumpers and drillers, they're all here in the mix. And I'm just seeing a sequence of higher lows and lower highs. So it is consolidating. Now, the thing is, it's in a downtrend, but we've got a bullish cross of the 21 over the 50. We had some recent bullish volume coming in there. It's not a buy today. In fact, it might not even be a buy in the near future. But I'm just kind of keeping an eye on it because there are some really, really good values in this sector. I don't have any of them on, but there are some, and we just need to keep an eye on that. Okay, what else did we want to look at? Bitcoin. So Bitcoin was down pretty big overnight. There was some news out, I think it was Friday night or Saturday morning, of a guy who owns a whole bunch of Bitcoin, billions and billions of Bitcoin, and he was selling half of his stake. Now that sent ripples through the market. We did recover. We got pretty close to even a couple hours ago, and it's been rolling back over since then. So a 2% down day in Bitcoin is not a good thing, not a good thing for Bitcoin, but this is what I've been saying for Bitcoin all along. This shelf right in here, and it's not just this little space, it goes all the way back to these highs back here. There's a lot of sell orders in that area, right? From about 110 to 112. A lot of sell orders in there, and every time we get up into that area, it keeps getting pushed down. We get up, gets pushed down. What I like about the current price is that we're still pretty close to that shelf. We can come down here to the 21, even to the 50, and hold and bounce and reverse back up. And I think by the time we get back up to that shelf, a lot of it is going to be gone. So I'm still bullish on Bitcoin. I don't like what it's doing today, but I think it's just a response to news. The fact that we're not down 5 or 6% on news like that is very good. So I think we'll be okay with Bitcoin. All right, yields are up big today. That's one of the reasons why stocks are down. And we really don't want to see the 10-year yield get past that pullback line, but it sure looks like it's going to. I do think bonds are a short from here, not a long. And why? Because it has broken again. I don't know where these lines would go, but it's broken another bear flag in a downtrend, and today is the confirmation day of that. So we're long calls of TBT, which is the 3x bearish version for the 20-year bond over in the options room. And I think we have TBT on in my ETF trend letter. I'm not so sure. So yeah, I've been bearish on bonds since it hit up here into the blue zone of the downtrending LRC, and it just rolled over from there. So not looking so good. All right, let's take a look at. Let's take a look. We'll do one more thing, and then I'll take some chart requests. So if you guys want to, put some ticker symbols over in the trading main room, I'll take a look at those in just a minute. So I've got over here, I've got two lists that I like to keep updated pretty much on a daily basis. I've got a list of what I call big upside growth. These are the fun stocks to trade. They tend to be higher in beta. They tend to be, you get stocks in here that are like meme stocks. They've got lots of growth but no earnings. There's all kinds of positive press about them. Analysts are getting on board. Hedge funds are buying these guys. They get all kinds of talk on the social media boards. I'm in a pro trading group, and when my pro trading group is focused on a ticker symbol, I put it over here as well. So we've got some really good stocks in here too, but a lot of these are more sort of short-term, fun swing trading stocks. And I like to see pretty much, kind of how are they doing today? And you can scroll through these from worst to best. You can see Bull, which was up real big last week, is down real big today. It's been on my no-go zone list for a long time. And then last week it started to do pretty well. We did buy some shares, just some funny money shares. It wasn't even an official trade in the live trading room. And I think we're still long because I have a pretty wide stop on it, but not doing very well today. APLD is one that has been pulling back. It's now into a volume shelf, but not looking real good today. We got stopped out of this one, right? Nice big uptrend, and this was the play right there last week, right? We bought it on Friday, broke out, and then it right back down to today. We got stopped out, but it's probably going to be okay because here it is at the 200, the 50, and just above the 21 where it reversed this morning. So a lot of folks interested in NBIS in my pro trading group, but I don't really like this setup here. It's banging again on the bottom of this shelf. You kind of want to see it banging up on the top, not on the bottom, but we'll see. If it can hold that level and get back up to maybe 49, it could well be a nice buy. It's got some good fundamentals. We did nibble a little bit on Core Weave on the news this morning, and we got in at a pretty good price because it had dropped quite a bit from Friday's close. And let me see a few others that are. Let's look at the strong ones, shall we? So Circle is up above 200. Nice looking pullback. So here's how you can use, and I've done this many times now, the Fibonacci retrace tool to determine good entry levels on a strongly trending stock. Now, there are two ways you can buy a strongly trending stock. When it consolidates in a sideways base, or maybe it does a little flag or a triangle, and then it breaks out to the upside, you can buy it. Right? You break out to the upside, you buy it. But if it pulls back to a Fibonacci retracement level, that's another place where you can buy it. So you either buy the pullback or the breakout. There's not really no other choice. So, but a lot of times stocks will not pull back to key Fibonacci levels. They're so strong, they just float around near the highs of the uptrend, and then they build a little bit of a base up there. They build a flag, they build a rectangle, and you can buy that when it breaks out to the upside. So Fibonacci levels don't always get hit, but when they do, in something like this, a really hot IPO, you want to pay attention. So you take let me take the Fib tool off of here and show you how to put it on. So the intraday low on IPO day number 1 was down here around 64.36, and the intraday high, the IPO high since launch, is right around 300. Can you imagine? You bought down here at 62, and about 2 weeks later, you're up at $200 a share. That would certainly be a nice trade. Did I catch that? Absolutely not. I just wanted to let it settle first. It just was going too far too fast for my taste. I'm not that kind of a fly by the seat of your pants sort of trader, but here's what you do. So it hits the 200 and then it starts to come back down, and you want to get in. You want to get in on the pullback. Where should you get in? Well, you put this tool on from the absolute low of the uptrend, the current uptrend, to the absolute high, intraday high, and it gives you these retracement levels. The black line is your 50, so that's exactly 50% retracing that entire run. 38.2, 0.382, 38% of the retracement is typically your first stop on a pullback. And if it stops there and starts heading back higher, that's a very strong trend. If it breaks through that and gets to the 50 and starts heading higher, okay, also good. When it gets down below 50, you have to be careful here because sometimes they just keep going lower. But this green zone here is what I call the buy zone. It's down deep enough off the highs that you take a lot of the risk out of the trade, and it's still got lots of upside because you're 60% away from those highs. You could get a 60% run back to the highs again in a month. So this green zone is a good place to buy, and you can see it dip down into the green zone 1 day, 2 days, 3 days, 4 days, and a little bit on Friday last week, and then today is the day that it's moving higher. So the buy signal, you can buy down here in the blue zone, nibble, 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 and then add when you get a confirmation bounce to the upside. Rocket Lab, we have some of this one, I think, we've got options in the options room, and it's doing really well. It's one of the few greens strong today. We've got options on Unity software, which is up near not 52-week highs, but it's getting there. Nice breakout move today. We do have shares of OPFI in the live trading room. We just bought those this morning, and looking very good. So when you start to see, right, it's a weak tape, a lot of stocks are down. Most stocks are down. Almost 80% of stocks are down. And something like this, this is a, is this, I just posted about this on on StockTwits. Is it the payment processing platform as a service play? Pretty sure that's it. Or is it the, I might be confusing it with an up and coming cybersecurity play. It's one of those. And it's getting a lot of good press. It's got great analyst support from some big five-star analysts who are seeing it going to 18, 20, $22 a share. And it's down here at 14, pushing off the 21 period moving average in an uptrend. Looks good. Looks really good. So this is one of those plays where you're not going to get a Fibonacci retracement. The uptrend is just too strong, but you can buy it up here inside of this consolidation base and add a little bit more when it breaks out to the upside. We just have a small lotto, I think, on this one. Okay, I think that's about all I want to do. There are a couple of others that I've got my eye on. Not in yet, but I've got my eye on. TOST is one of them. And that rounded bottom didn't actually play out, but it is forming what we might call a bull flag or a high tight base. It's just bouncing around inside that. It's a bit messy, not really that exciting just yet. But this one it's a small float, tends to carry a heavy short position, and it can really skyrocket when it gets going. And there's a lot of interest in this one in the call flow as well. And this one, the Singapore mobile app software play, let me get rid of these lines, has some very good growth. One of the best rated stocks in tech, especially mobile tech in my IBD universe. But we've tried this a couple of times and it keeps either stopping us out or we just have to take a scalp profit. It's not giving us what we want and not really showing us a good pattern yet. But that's what it's doing. It is doing a falling bullish wedge in an uptrending stock right around the 50 period moving average. I don't like the fact that the 21 is falling and it's below the 50 now. So I don't think it's the buy until it gets back up above the 50 or breaks out of this wedge. So we'll keep an eye on it. It's not ready to go yet. Duolingo, I would like to see this print a double bottom. It's got some bullish divergence going on there. It's an uptrend. It's in the pink zone. Tempted to throw on a little bit of it today, but I don't think I will. And let me see what else we've got going on here. We are long app, kind of waiting for this guy to get excited. It did break out, and it's just been going sideways ever since. RGTI, we're in this one in calls, and it was just green a little bit ago, and now it's down 1.2%. But it's holding up very nicely today. You can see it had a couple of really nice days, big volume coming in on Thursday last week, confirmation Friday, and it's holding up near the highs of that range. It's just got this little shelf, right? The darker the color, the more intense is the supply in that shelf. So not going to break through that anytime real soon, but it should. It really should. Okay. And you can see the overall pattern here. It's a big rounded bottoms are always bullish. Rounded bottom with a handle, cup and handle, bullish cup and handle. So once it gets up above 15, it should really fly up here to the, almost 20 and tag that shelf, but it's got some work to do. Like Bitcoin too, it's got some work to do. All right, guys, let me see what you're interested in, and we'll wrap this up here in about 10 minutes. So let's see if we can go through some charts. I only see one. No, two. FTI. F-T-A. F. I don't know this. Aviation. All right, let me just take a quick look at what kind of stock this is. Rental leasing services. I guess it's plane rentals. Is that it? Okay, I don't really need to know. It is profitable. That's a good thing. It's got some massive growth numbers. Look at that. That's all good stuff. Some wide operating margins and even pays out some dividends. So its balance sheet looks pretty good. Heavy debt, but if it's got a whole bunch of planes that it owns, that explains it. Yeah, so it's not the greatest chart, but let's see if we can find some good stuff going on here. We've got the 21 above the 50, 50 is rising. We are below the 200. That's not so good. The LRC, which is a 100 period look back, is slightly rising. That's a positive. Real big, nasty selling day right there. I have no idea why. Not a lot of price movement, but a ton of volume came out of that. Must have been some news out there, and it's been following through ever since. Now, if you're not long, I would just stay away from this for a while. It was kind of a no-go zone for me. But if you're long and you're kind of looking for some hope, then it is at a modest support shelf, and it has kind of been down here at these lows before, and it bounced up. And it is a higher low than these pivot highs down here. So, yeah, but I don't know. It's slim pickings on this one. I think in a better macro environment, maybe a couple of weeks from now, this might be a good play to look at. But I wouldn't be a buyer here. And if I were long already, I would probably be keeping a good stop in place. Okay, let me see what else. ASST, asset entities. All right, well, big up today. Must be some news out there. We've got a fresh MACD buy signal. You know, a friend of mine runs a trading system. It uses the RSI and the MACD with some other things, but those are the two main things. And when RSI drops below 40, not 30, but 40, which is more common than 30, of course, and a MACD crosses to the upside from below the zero line, which is exactly what's going on here, he gets a buy signal. There are some other things that he looks at as well. So this is a fresh buy signal per that signal, because I assume this is down below 40, probably below 30. But that's a big upside, and it already has come way, way, way off the highs. So if you bought it up here, shame on you. Hopefully you didn't. Hopefully because you've learned from what I call my big green stick rule, that you don't buy the top of a big green stick, because you're more likely than not to get a better price the next day, next week. And yeah, I don't know. If I'm long, I would be trailing up my stop. I'd probably be taking off some profit and then rolling up my stop to maybe like 585 and then 620, something like that. But I would be incrementally protecting those profits, because this is the kind of chart you can see the big slam down selling pressure that it can have when it gets a little too extended. That could happen tomorrow, right? So you have to be careful with that one. I know nothing about the company, and that's not the kind of chart I like to trade anyway. AMD. So we're long AMD in our wealth building portfolio. We're well into profits. Just a little bit of a pullback here. I think AMD's got a great future. It is a longer term hold for me, and I have no plan to sell soon. It's had some good volatility lately, so it's been a fun trading stock as well. But I think on the fundamentals alone, it is a good hold. I wouldn't be a new buyer until it hits the 21 period moving average and then shows me that it is holding that and reversing. We're not there yet. We're still in selling mode, still in pullback mode. We've also got a little bit of a gap there, which can act as a bearish level of resistance. So it gets back up under that gap and then it pulls back down again. So I wouldn't be a new buyer today, but I like it. It's starting to show us on a longer term basis some really good stuff. It has broken out of a long-term downtrend. If you look at the weekly chart, you'll see that. And the company itself is doing some amazing things, really good stuff. They've got a great CEO that had just turned the whole thing around. It was one of the most hated stocks for a long time. It went bankrupt, or almost went bankrupt, about 10 years ago. She came in, turned the whole thing around, and now it was the second most successful stock on a return basis over the last 10 years, second only to NVIDIA. And it's now, it's had a long kind of, I don't know what, just having some trouble, but coming back. So I like AMD. I wouldn't be a new buyer today. We'll let it hit the 21. So I'll do MSTR, trying to only do one each, but I'm long MSTR calls in the options room, and I am bullish on both Bitcoin and MSTR. MSTR, I think, announced today that it was selling more of their shares to buy more of the Bitcoin. and it's just a play on Bitcoin. If you look at all the stocks that are correlated to Bitcoin, this is the number one, almost a one-to-one basis. You know what number two is? And it has nothing to do with Bitcoin. It's interesting. It's AXON, Axon, one of the best stocks in the IBD universe. I talked about it on my IBD live show a couple of weeks ago, and it's in the defense space. It's the old Taser, built the Taser, and now they have an AI platform that it has to do with drones and tasers and body cams and dash cams and all kinds of stuff, and they're just doing great. And for some reason, they are the second most correlated stock with Bitcoin. I don't know why. So, but this is number one. What you've got here going on bigger term is the rounded bottom cup, nice shallow tight handle, and we're just kind of waiting to get through this volume shelf up in here, just like Bitcoin is also. So it's just going to take some time. It's one of those you have to sit with for a little while, but I'm bullish on it. And if you're not long MSTR already, I'm not going to kick you in the pants for buying today. I would not at all. Upstart has had a really nice run. Yeah, well, look at that. So it's up nicely today. It's a hold. It's not a buy. You're a little too extended here away from those means, and you're up in the blue zone of a slightly downtrending LRC, but it is a great hold. We looked at this one a while back when it was printing this, right? It was printing that. And then I'm not sure why I kind of lost interest in it or moved on to other things. Maybe it was this little pullback here that I thought maybe it's negating that signal, but it's just been up ever since. It's very good to see. Why? Because this is a growth name. I'm not even sure it's profitable, but if the market likes this kind of stock, the market is going to like a lot of other stocks that are a lot of fun to trade. So look for the next Upstart. Unity might be that. You can also look at like CoreWeave and Circle. What's PLTR, which is defense, but also software. Uber is doing well today. There are a number of AI/software names that are strong. Toast is another one, software, AI software. Okay, enough about that. It's a hold, not a buy. KOLD. Okay, so let's take a look at for this natural gas, because that will chart better than those 3x leveraged. So what have you got going on here? You've got a clear line of support. Looks like we're kind of lounging around down there at that level. It is in a downtrend. And yeah, so natural gas itself, right? The KOLD is the bearish version of natural gas. So if you think natural gas is going to fall through the floor here, KOLD would be a good play. Yeah, I think it looks like to me it's going to fall through the floor. Why is that? I don't know. Sometimes I think, okay, well, we've got a bunch of cold weather coming in, and so natural gas is going to go really high, and it doesn't. Or it's a really unusual heat wave, and so natural gas gets pumped up because everybody's running their AC, and it's a drain on the natural gas supply. And sometimes you make those correlations, and you think, oh, easy trade, and then it doesn't work out. Natural gas, it seems to follow its own thing. Or maybe it's so far looking out ahead that when you have a weather change, it's already priced that in. I don't know. But so trade it on the technicals alone, and I have to say from a technical perspective, this looks to me like it's ready to pop through that floor. Why? Because it's been knocking on that same level for several days in a row. It's not going higher. Every time it gets a little bit high, it falls back down again. And you've got MACD showing, if you look at MACD on a trending basis, you're going to see a breakout there to the downside. Yeah, so I would say KOLD is better than boil right now. All right, let's do one more ISRG, and then I'm sorry, I'm going to have to let you go. ISRG. So this one is Intuitive Surgical. Yeah, this one is often in the IBD top 50, sometimes in the IBD top 10. I don't think it's been a great a trade recently. It got slammed back here in March, and that was ahead of the tariffs. So it's not really a tariff problem. Here's your April low, and it hasn't gotten back up to 52-week highs when a lot of other stocks, like the semiconductors, are back up at 52-week highs. So, and it's in the space. It's in the biotech, medtech, healthcare space that has not been doing very well, in part because of government regulations, some uncertainties there, and yeah, I don't know. And tariffs, I guess, could factor into a mechanical robotic play like this also. Um, that all that said, it is a very strong company. The fundamentals are still very good. I'm sure it has an excellent future, but it looks a little iffy right now. So here's the bigger picture. You've got a sequence of lower highs, and you've got at least the potential of a sequence of higher lows. That's positive, but it is in a downtrend. Is this a downtrend? No, not really. No, I'm sorry. The longer term trend is up. So up, 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 and then consolidation into what I call an apex setup. You expect to break out to the upside. That's kind of where we're at. It would be a hold for me. I don't think I would be buying it today because it looks to me like it was to come back down and test the midline of the LRC, the support line of this wedge, and down there might be a very good place to add or to buy. Even the 200 period moving average, if it can get down there, it hasn't been down there for a few days, then that also might be a place to add. All right, guys, I'm going to let you go. God bless everybody. I'll produce this video, get back into the main room with a link, and we'll trade the last hour or so together. God bless. Bye for now.